Okay, welcome to our resistance tutorial. Right, what we're going to be teaching you here is how to draw resistance lines and how to trade them. On this example, again, each of these black bars represents 1 day of price movement. So it starts off, it goes up, you have a bar, you see where the first bar touches sorry, not the first bar, the first touch of that red line. On that day it hits a certain point, and in the next couple of days it comes down. You now know that is a resistance point. It's a point where the buyers couldn't really push the price any higher, so selling pretty much dominated the trading activity at that point, so the price comes downwards to find buyers again. What it does is it comes down and then goes back up. Now when it hit the high of that first touch of the red line, a trader would notice that. It'd make note of that and it'd draw a line across, as we've done, extend it across, and the next time it touches that line, if you want to sell shares, that's not a bad time to sell, because it's got a history of being a resistance point. It was a point in which selling was outweighing the buying. So there's a good chance that if we get to that price again, i.e. the price comes up to that red line, there's a good chance that history will repeat itself and selling will outweigh the buy. See, I got it right that time. I didn't say buying outweighing selling. So yeah, anyway, right, so if you look at the last bar that we've drawn on this picture, if you held shares in this company, where would be a good time for you to sell if you were looking to sell? Now, there's a lot of factors, and every situation is different. It's never particularly easy. But if you wanted to sell, wouldn't it be a good thing just to see if it actually touched that red line again? And if it did touch that red line, dump the lot, take your profits and get out. And that's what resistance is all about. So here we go. This is an artificial example, but it happens quite often on the stock market. You see this quite a lot. So the price did rally up to that red line. And then the price dumped afterwards. The price dumped because it's the perfect way to sell your shares. If you're looking for an exit or somewhere to take your profit, that's where it would be. As we say on here, you'd be amazed at how many people do the opposite and actually buy because the price has gone up. They think it's oh, this share's been going up, it's a safe share to buy. No, don't, just don't. But the all in a nutshell, basically, resistance points are ideal places to sell your shares, and that's why they're so important. So let's go on. Okay, so this is a slightly more advanced tutorial for the resistance lines. So if you look at the fourth bar, it's quite a long bar and it touches a point and then the market backs away. So what we can do is draw a horizontal line across, which we've just said in the last bit. Only on this example, we said that nothing's clear cut, there's no black and white on the stock market. It's not, well, there's lots of factors that come into play. On this example, actually selling wasn't as dominant as it was last time, and the market wants to go higher. Buyers are more enthusiastic and they're willing to pay a higher price, and it actually smashes through that horizontal line. So this can happen quite a lot. So what we do then as a trader is we wait to see where the next resistance point is. We make a higher high and we wait, because what will happen in an uptrend, it will keep making higher highs, but we wait for that highest high. So when the market puts in a high and then backs away, that is a resistance point. And in this example, we've actually circled is that brown? I think it's brown. The highest high of that little rally. And what we can do now is we can draw a red line, ascending line, connecting both of them high points, which we've done, because that could potentially be a resistance point, but we won't know if that's for sure until we get another touch. So the market then rallies again, and then what happens is it puts in another high at that red line, because that would be our selling point. Because if we're thinking this red line is our resistance line, if it touches that again and we want to sell shares, that would be a good point to sell. And I think that's the reason why resistances work, because people were thinking, right, I've got some profit now, I want to seal my profit by selling the shares. Where's the highest point to it? Because you don't really want to be selling your shares and then watching the share price go up and up and up after and think, oh, I could have made a few £100 more. So you want to be trying to sell as high as you can, and that's why we use resistance lines. So here we go, reiterating what we just said. We touched on this on our support line tutorial. It takes 2 points to draw a line and a third point to confirm it. So really we need 3 touches of a line to say yes, that is actually a valid resistance line. The second what we just touched on, the second touch of that red resistance line, what we can also do is draw a horizontal line across, because there is an element of guessing where the resistance is going to be, and realistically we might not have got a touch of that ascending, a third touch of that ascending resistance line, because what might have happened, when you look at the bar that touched it the second time, we've drawn a red line across. The price might have rallied down, gone downwards and not been able to get above that red horizontal line. Then that would have been resistance. So there is an element of guessing, but the moral of the story is, again, once we got above that little horizontal line, both horizontal lines we've drawn 2 on here, we've gotten above 2. If you want to take your profit, you're looking for a potential resistance. You don't want the market to go up to a what you think is a resistance point and then back away a good 10% and think, oh, actually I should have sold there, but it's a bit too late now. That's why you need to sort of have an element of guessing. You need to be really receptive to what's going on, where the highs are in the market and where it's backing away from. Draw lines. Not all of them will be valid resistances, but if you're looking to get out and sell, you need to be paying attention to where these resistance points can be before they become really obvious, because once they're really obvious, other traders have already sold and made the price come down. So you might have guessed already the answer to this question, but why does a resistance act as a resistance? Why does, over and over again, the stock market rally to a certain point or a certain resistance line and then back away? Well, I mean, if you look at this example again, the first touch of that red line, that just happened to be the price where the sellers overpowered the buyers. So perhaps it went on quite a long run. There was some, big traders that got in near the bottom, and now they're taking their profit. That was the price they chose to do it at. There was quite a big back away. New buyers would have come in at the lower prices. By the time it goes back upwards towards that red line, they're thinking of selling. Some of them might not care if it goes above that red line. They think, right, I'll take my chances, let's sell at the red line, and then because of that selling activity, perhaps the share price starts showing some weakness, looking like it doesn't want to go much higher than that red line, which makes more sellers come in and think, oh, I'll take my profit now rather than risk it. So it ends up being an area where selling dominates buying again, so the price comes down. So in this example, if you look at the last bar, if that started going a bit lower and then rallied up again, the third touch would absolutely guarantee that resistance, but it would be quite obvious to everyone that it's there. That's the reason why we have to be quite nimble with these sort of things, and an element of guessing. Unless you are a very conservative trader, then you would wait until a trend line has been confirmed before you trade on it. So you might have guessed already the answer to this question, but why does a resistance act as a resistance? Why does, over and over again, the stock market rally to a certain point or a certain resistance line and then back away? Well, I mean, if you look at this example again, the first touch of that red line, that just happened to be the price where the sellers overpowered the buyers. So perhaps it went on quite a long run. There was some, big traders that got in near the bottom, and now they're taking their profit. That was the price they chose to do it at. There was quite a big back away. new buyers would have come in at the lower prices. By the time it goes back upwards towards that red line, they're thinking of selling. Some of them might not care if it goes above that red line. They think, right, I'll take my chances, let's sell at the red line. And then because of that selling activity, perhaps the share price starts showing some weakness, looking like it doesn't want to go much higher than that red line, which makes more sellers come in and think, oh, I'll take my profit now rather than risk it. So it ends up being an area where selling dominates buying again, so the price comes down. So in this example, if you look at the last bar, if that started going a bit lower and then rallied up again, a third touch would absolutely guarantee that resistance. But it would be quite obvious to everyone that it's there. That's the reason why we have to be quite nimble with these sort of things, and an element of guessing. Unless you are a very conservative trader, then you would wait until a trend line has been confirmed before you trade on it. So in a down market, we can actually use resistance lines to measure the momentum of the downtrend, see when it's getting faster and when it's actually starting to slow as well. And you can use resistance lines to do that. This is something that we'll go over on private lessons, because it's something that there's ways of telling when a market is like that's been going down a while, when it's showing some sort of weakness and actually buyers are starting to come in. And one of the ways we use these like speed lines, we can teach you, but this is just a quick visual to show you that you can measure acceleration by various resistance lines. Right, a few more things then. So in this downtrend, you see the descending red line. That's had 3 touches, so that is now confirmed as a resistance. But on the 4th attempt of touching it, it actually breaks through. This can happen. I mean, the resistance is all it pretty much is telling us is it's an area which is likely to be dominated by sellers. It's not guaranteed. There will be points where resistances are taken out and the market goes higher, so they can get breached. But if you want to take profit, as we keep saying, that is an area to do so. There is traders, and we've done it ourselves, where we've watched the resistance, thinking actually this might break upwards, and there's a lot of traders that get caught out buying on resistance lines. There's also a lot of traders that get caught out selling on resistance lines, because they can break out. Sometimes they look like they're going to break upwards, like break the resistance line and go upwards, like in this example, but they don't. So we've got a very good way, a very good strategy of trading these, and we'll share that on our private lessons, because there's not enough time to go into it now. It's quite a high risk trade, but the rewards can be very good, and the way that we trade it is not as high risk as other people trading it. We don't get caught out very often making this trade. When we do trade this sort of breakout, we normally always make a profit because of the way we do it, but we'll go through that on private lessons, etc. Right, a few little points for you to read through. Some of them are quite important. The point on previous resistance points, if you actually look at the long-term chart for the S&P 500, if you look at when the stock market crashed in 2000 because of the dot-com bubble bursting, the crash in 2008 was at exactly the same resistance point. So the high of the market before it crashed was at the same point it crashed in 2000. That is just basic charting that we've gone over in this tutorial. Once a resistance line is beaten, i.e. the price gets above it, it then becomes a support. So that's something that we haven't touched on yet, but that's more important when you're trading a breakout. If the price gets above a resistance and comes back down to back test, that is a good buying opportunity. But anyway, have a quick flick through this, and happy trading. I hope you learned something today.